There are two universal principles regarding the reasonableness of employee compensation. Most people feel they are undercompensated, and 2. Those same people feel their friends and neighbors are overcompensated. There are many reasons for this phenomenon, but for our unscientific purposes it's enough to think of reasonableness like beauty, it's in the eyes of the beholder. The tax world is no different, except the incentives differ when it comes to determining how much compensation is reasonable. The particular tax incentive will depend on the type of entity and tax involved. For starters, the concept of reasonable compensation does not apply to businesses operating as a partnership or sole proprietorship because partners and sole proprietors are not considered employees and they do not receive a W-2 wage statement. Instead, the earnings of partnerships and sole proprietorships are subject to federal income and self-employment taxes regardless of how they are received. The concept of reasonable compensation comes into play with C corporations and S corporations, and then almost exclusively in the context of compensation paid to owners of the business. In some circumstances, taxpayers are better off tax-wise if they pay shareholder-employees a higher salary, in others, they are better off paying a lower salary. This creates an interesting tension between taxpayers and the IRS because they end up on both sides of the reasonable compensation issue, which is uncommon in the tax arena. Usually, the IRS is expected to argue one position and taxpayers the opposite. For example, taxpayers frequently deduct items that the IRS disallows, but the IRS generally does not argue that taxpayers should have deducted an expense they did not deduct. With reasonable compensation, taxpayers need to thread the needle between paying an amount that is too high or too low depending on the situation. Let's see why that is the case. C corporations can deduct no more than a reasonable allowance for salaries and other compensation for personal services. There are additional limitations on publicly traded corporations not discussed here. This is considered an ordinary and necessary business expense, and the amount that is considered reasonable serves as an upper limit to the amount that can be deducted. Anything over such amount is termed lavish or extravagant. Thus, if the IRS were to challenge a taxpayer's deduction for compensation, which includes regular pay and a bonus, as unreasonable, then it would argue the amount paid exceeds an ordinary and necessary amount.